All right, so today let's start talking a little bit more about this fractional reserve banking. Not everybody understands what it is. It can be a little confusing. What I want to do today now is talk about what it is, what it means, the potential risks, right? We saw SVB, Silicon Valley Bank. We saw what happened there. We see what happens with bank runs. How does it all work? How much risk is there? So let's first start talking about the actual system itself, fractional reserve banking. Basically, all that is, when you put money into a bank, into a lending institution, a financial institution, it's no longer your money. And most people don't understand that. Very, very, very few understand that. But that's the truth. When you sign the account documents, when you open that account, you're basically saying, I'm going to give you my money. They don't have to hold it all there. Fractional reserve is basically, they can take that money and deploy roughly 90% of it into other investments. For them providing the service of holding and storing your cash safely, they need to make money on that money. They're a business. So what they do now is they're going to take 90% roughly of that money that you've deposited with them, and they're going to lend it to other people. They're going to buy government-backed securities. They're going to buy T-bills, T-notes, T-bonds, things like that that are supposed to be very, very safe, very conservative, and they are. But things can happen, as we saw with Silicon Valley Bank and a few others. You have a bank run, and you don't have everybody's cash. Everybody wants their cash at once. Remember, they only have about 10% of your cash on hand. And if you're the only person that comes in and says, look, I want all my money back, no problem. The problem arises when everybody wants their money back, or a huge number of people want their money back. They don't have that cash. So now that what they have to do, they have to go out and sell those investments they've made. And if those investments have lost value, which is exactly what happened with all the things that they were putting their money into, with 10, 20, 30-year maturity bonds, notes, things like that, all the values crashed when the Federal Reserve started hiking interest rates like crazy. So now they have a bank run. Say 50% of the people want their money back. They only have 10% of the money. They have to go start selling stuff now at a loss. If the losses are big enough, they go bust. You have FDIC, right? You're going to be protected up to $250,000. What if you have $1 million there? What if you have 2 million, 10 million? What if you have $251,000, right? Anything above that $250,000, basically speaking, there's more to it than this. There's a deeper dive to make here, but simplistically, anything above $250,000 is a risk. So if they go belly up, remember, that's not your money. You gave it to them to utilize how they see fit. Because they have to make money. It's a legitimate thing. They have to make money to keep their business afloat and profitable. But now the bank goes bust. You're protected up to $250,000. Let's say you have $1 million in that account. $750,000 of it may be gone. Again, you need to understand, when you give a financial institution your money, it's no longer technically your money. You are now a creditor of the bank. If they go bust, you're out $750,000. You're basically going to stand in line with other people with your hand out saying, hey, give me my money back. Everybody's in that same line. You're not going to get it all back, almost guaranteed. You'll get some of it back, maybe. Maybe you'll get a lot of it back, but you're not going to get it all back, almost without exception. I'm not talking about this stuff to scare you. I'm not a conspiracy theorist. I just need you to understand what the system is. I'm not telling you to take all of your money out of the banking system now, hide it in your backyard, bury it. No, I'm not saying that. I'm not saying go out and buy Bitcoin or Ethereum or any altcoin. I'm not telling you to put it in gold or silver. I'm not telling you what to do with your money. You have to make that decision for yourself, for you and your family. But I need you to understand what's going on. You have to be educated. You have to do everything with your eyes wide open so you don't get surprised. Do what you think is right for you. Just explaining fractional reserve banking and the fact that the money is no longer yours.